Hello guys, and welcome to another develop video. Today taking an in-depth look at Conagra Brands, formerly known as Conagra Foods. It is an American consumer packaged goods holding company headquartered in Chicago, Illinois. Conagra makes and sells products under various brand names that are available in supermarkets, restaurants, and food service establishments. Now, first, let's start with their valuation. Their free cash flow yield is 11.23%, and the price to earnings is 26. Their business metrics now, they look pretty mediocre. The return on tangible assets is 4.6, the return on equity is 4.1. The current ratio is a bit better than the other metrics at 0.97, and the return on invested capital is 2.62%, which is very low. Now let's move on to Grant's valuation. Using the 2025 estimated earnings per share of 2.35, we get an intrinsic value of 26.42. Next, let's move on to the discounted cash flow model, where based on a 2% perpetuity growth rate, we get an intrinsic value of $37.4. Their historical average P ratio has been 10 over the past 10 years. Now the dividend discount model using the 2% growth rate, so in line with the estimate I put in for the free cash flow growth, we get an intrinsic value of $23.8. Now the output is the average of all these three, so $29.21. Of course, we should apply mandatory 15% margin of safety, and applying this margin of safety, we get an intrinsic value of, no, sorry, an acceptable buy price of $24.83. Suggesting our stock is also the current price. Now, what I believe about this company is that they're trading at a bit below intrinsic value, but the problem is here that they're a no growth company. So, or sorry, not a no growth company, but a very, very low growth company. So they need uh, a bit of a higher margin of safety because not only do they have very low growth, they also have pretty bad business metrics. So when buying such a company, you must look for a 25 to 30% margin of safety. So somewhere in between $22 and $20 should be your buy price, in my opinion, should be your target price. Um, and also, I must add that companies with very low ROIC, even if you buy them at a great valuation, you must only hold them for a bit of time until they reach fair value, and you should sell immediately because they're definitely not a long-term hold, in my opinion. There is not much opportunity here. This is just a value play in the making. If their stock drops another 20% or 30%, then yeah, this is a clear value play. But for now, they are a watch in my point of view. They're just something you just put on your watch list, and that's it. Now, today I used our affiliates Ticker Data. Ticker Data is a great tool. So you see this template here, all of this with real-time financial data and with this ticker symbol and recent finance fiscal year. Sorry, this is Ticker Data. It's a great tool. I suggest you check it out in the link in the description below. It's also pretty cheap, and I think you'll love it. Also, do not forget to check out my investing blog from the link in the description below. I recently posted an article on the AI bubble and how Trump's tariffs are impacting the economy, and I think it is a great article and I think you'll like it. I hope to see you in the next video. Bye!